Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome. Miners and unions in the gold and coal sector will soon sit down to a new round of wage negotiations. We are looking at the gold sector with Harmony Gold Chief Executive Graham Briggs. I'm Tumisho Grater and this is Resource Watch. Let's kick off with the market wrap for this week.
South Africa's Mines Minister Nwako Ramatlhodi says his department has issued 300 orders against mining companies which have not complied with the mining charter. He promised that more were in the pipeline as government pursues its goal of enforcing 26% black ownership among miners. And South Africa's National Union of Mine Workers says about 10,000 jobs were lost in the mining industry since the beginning of this year. It says as of today, about 30 companies have issued it with notices of their intention to shed jobs. This could see a further 15 to 20,000 workers laid off.
Harmony Gold, not unlike other South African gold miners, has been experiencing some tough times. In the face of slowing gold prices, it's been in cost-cutting mode, trying to return to profitability. Earlier, I sat down with Chief Executive Graham Briggs and spoke about challenges at the mine and for the industry as a whole. I first asked him about the differences of opinion between the industry and the government on the empowerment targets.
The difference of opinion is not clear to the industry, and it's certainly not clear to Harmony as such. And it's because we're looking at a population-wise of mineral rights which is different to what the minister's looking at. So I think the numbers he's looking at in the press, something like 422 mineral rights. Now, when you look at the chamber numbers, of course, we believe that we're 38% empowered. And that's different from what the minister is. And there's a further complication, and that is on how do you look at that, whether it be black empowerment or whether it be community-based or whether it be employees. How do you look at that black empowerment? So that's where the difference of interpretation, opinion, or whatever is. And that's the nub of the issue. From Harmony's perspective, we empowered. We don't have any doubt about that. We've looked at it. We've had it independently verified. There's no issues with that.
Now, another topical issue in the mining space, especially now with gold and the gold sector, are the wage negotiations. UMCU has put forward a demand. They're looking at 12,500. NUM, we haven't heard anything yet. So first, just take us a step back. When are these negotiations set to start, and have you heard anything from NUM?
Yeah, we've actually got demands from every one of the unions, and I think there are 4 unions. So it would be AMCU, NUM, UASA, and Solidarity. Look, the wage negotiations are going to be tough. There's no doubt about it. And tough not because companies are unwilling, but because of affordability. Can they afford to pay the wages? And so that's where the big issue is going to be. The wage negotiations are going to commence probably within the next few weeks, but certainly by mid-June, I think they'll be well underway in sort of discussions between the gold mining companies in the chamber as well as the unions.
What can you afford? There's been reports that these demands are excessive. Is it fair to say that they are excessive, and what can the gold industry afford?
Yeah, I mean, the demands are massive, and it's not a case of just looking at the 12,500. You have to look at the whole scale. I think if you take the 3 major companies, AngloGold Ashanti, Sibanye, ourselves, you're probably looking at 90,000 people that we employ. So it's large numbers of people, and remember 50% of our costs, roughly, are wages. So these are massive things. This can either make or break a company by actually, and to my mind, how can you give a high increase and then turn around and say, sorry, we're out of business, we have to close this down or close that down? I mean, to me, that's a little bit crazy. It's a case of really being open with your numbers and honest and saying, guys, this is what's affordable.
Mm-hmm. While we're still on labour relations, we had the AMCU President Joseph Matunjo in studio with us, I think about 2 weeks ago. He spoke about one of his gripes being the fact that he's not recognised as a majority union. And he said that he actually has a lot more clout than what is seen to be reported and what is seen also by some of the mining companies. From what you know, is this in fact true? Are they still a minority, or are they sitting in a majority position at the moment?
Yeah, so what happens on a particular operation, and a particular operation normally has some sort of recognition agreement with the union, and it depends on the numbers of people they have. And so this would go through a process, and it's a stipulated process. It's controlled by the Department of Labour and everything like that. So, if you get up to 20%, then you've got certain rights. If you get up to majority or 40%, you've got further rights. And so you can be a majority. So it goes through a process, and it goes through by people, employees, belonging to a union. So once they sign up to union, then the numbers come out. So it's a process. It's not a case of, my opinion. I just look at the numbers. And I know that, for instance, the Kasasaleti, everyone knows, AMCU in the majority. We've got another operation in the Free State, Masimong, where AMCU are around about 42% or so. We have other operations where there's no AMCU members. So, it's not a case of my opinion, it's a case of what are the numbers. Mm-hmm. Yeah.
Graham, just another point on that with regards to labour issues. We have seen Goldfields do a separate wage negotiations. Nick Holland did say it was because it was a mechanised mine, and it called for a separate agreement. Do you still think that collective bargaining when it comes to wage negotiations is still effective, or do you think maybe it might be better for miners to go at it alone?
Yeah, it's quite a difficult and complex process. I mean, Goldfields has got one operation in the country. Harmony has got several, and we have a whole range of operations, from making big losses to highly profitable. Quite a few in the middle, marginal. And so how do you have an agreement on an operation and transfer somebody from a highly profitable mine into a marginal operation? Well, I mean, the employee won't go. But if you're collective in that, every Harmony employee is looked at as a Harmony employee, and where there's a vacancy, we can move you around and so on and so forth, then that's good for employees. So we think it's actually good for employees. So to have it per operation is simply going to, it's going to speedily close those operations that are making losses, even though they may have potential, and it's going to speedily close those operations that are marginal, and means that you're going to pay higher and higher wages, so your profitability is going to decrease with the more profitable mines. It's a little bit of a crazy scenario, but when you get into Goldfield scenario with only one mine, well, it doesn't mean it. They can't transfer any employees. If they have to retrench, they retrench from that mine. If they need to hire, they hire to that mine.
Speaking about retrenchments, let's look at the operations of Harmony Gold. Kusasaleti, you mentioned just a moment ago, you have had retrenchments. I think you finished that in February, but
yeah,
you are still trying to turn the company around, making sure that it's a lean machine.
Yeah.
Where are we with that, and by when do you think you'd be able to be in a position where you are happy and you are back in the black?
Well, we're in a situation now where in Doornkop we have said that we have to restructure, and we've commenced on that process. We've started talking to the unions on that, so that's an ongoing process that will continue. And there's again, this is a process, a 60-day process, and then you can do things. In the meantime, we've got a moratorium on any new hires, which means if there's any need, people leave for various reasons or retire, whatever the case may be, we can actually move people from Doornkop into those empty positions, or those vacant positions. So that's what we're doing. Look, in the case of flat gold prices, and we've had flat gold prices for 4 years now, and costs that are going up, those two curves are crossing each other. And so you have to do something. You can't do anything about the price. There's nothing we can do about the price we sell gold at. We take the market price. We can only do things about our costs. So while there's no gap between those two, we have to continue trimming costs, and we have to continue to look at grade, see how high, if we can mine any higher grade. I mean, those are the two areas that we've got to look at.
What about the trends in the industry? I spoke to the CEO of AngloGold Ashanti, and he was saying that they are selling off assets that are not core to them, looking at decreasing their debt. In an interview last year, you mentioned that you could look at picking up some of these assets for companies that are heavily indebted. Is this still something that you may be looking at?
Look, there's various phases companies go through when hard times are upon you. First, you stop exploration. That's fairly easy. People stop exploration, and then you stop capital development, and then you stop some ongoing development, which is opening up the ore body. And all of these things will have the effect of a shorter life of industry. You're shortening the life of these assets by doing all these things. So you will continue to do those things. If you're really stressed, of course, like the example you're using, then you sell assets to pay off the debt. Now, I think every company is faced with that dilemma. There are a lot of gold mining companies with debt, and therefore, at some stage, you have to sell assets. You can't always sell the useless assets, unfortunately. Sometimes you have to sell some of the better assets, because the better assets will bring in more money to be able to pay off that debt. And where there are opportunities, in South Africa, then we should look at them, because we can mine, South African assets. We've demonstrated that our whole portfolio is actually acquired assets. None of the original Harmony assets are still in the portfolio. They've all been closed. So, we live off other people's assets.
In terms of pressure points, you are trying to make Harmony Gold a lot more leaner. You're looking at cost cuts. But there are other pressures, electricity. You've been vocal about the fact that it is hard to operate when you have an unreliable electricity supply.
It's very tough to operate, and I think it's tough for the whole of South Africa. They've actually, the whole of South Africa has realized what it is to go through electricity cuts. If you go back to the first mining electricity cut was 2008, we experienced that. It brings you to a standstill, and you can't have disruptions in a process, ongoing process. It's very difficult. And so, yes, I mean, it has been a big blow to us, and it continues to be difficult to operate under those conditions. And of course, the cost. I mean, the cost is just high. I mean, it's gone up, hundreds of % in the last few years. And, when you sort of look at it, it's really tough environment, and electricity costs have come up dramatically from probably they were in, 5 or 6 years ago, it was probably around 11 to 13%. We're now dealing with somewhere 18 to 20% on some mines. So it's become a much bigger proportion of the cost.
That's it for this week's show. Do stay in touch at CNBC Africa, and our hashtag is ResourceWatch.